mode.
All right. Let's try it again with audio. Thank you, Edward, Simon, Martian. I'm glad you let me know that there was no audio coming through. That audio probably wasn't coming through to YouTube either. So we're going to take it from the top. You should be able to hear me now. Vincenzo, let me know if you can hear me. Thank you for letting me know. Okay. All right. What did I just say? Okay. We'll just start. Not too much. My name's Jeff Gibby. Today, I'm going to be talking to you about Ichimoku Kinko, the Ichimoku Method. Thank you, Vincenzo. Okay, now you all should be able to hear me, Ma, Martian, Simon, Edward, in GoToWebinar as well. Please let me know you can. It will make me feel a heck of a lot better. Thank you, Vincenzo. All right, today I'm just going to give you a little bit of a lesson on Ichimoku, a method that was developed by Goichi Hasada. Um, um, Hopefully it's helpful for you. It's a very, very popular method, one that we include now with Metastock 19. Before we can get started, I need to read a legal disclaimer. I'm going to do it for the second time right now. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor are they paid for the promotion of any security. No information contained in the presentation should be construed as investment advice or the solicitation. Thank you, Martian, to buy any security. So there we go. It always works better when I turn on the microphone. And, I'm glad everything's working well here. Okay. So my name's Jeff Gibby. I'm going to be doing this webinar today. And my goal is to kind of just give you an idea of kind of the indicators that work in the Ichimoku method, kind of give you an understanding about how to use them, how they're interpreted. It's a very, very, very cool method. So to give you just a little bit of background about me, I've been here for almost 30 years now. I think it's 26 years. I started in 98, so I just had to add 2 to whatever the year is when I get there. So very, very great company to work for. I love Metastock. I love kind of running my scans every day, looking at the markets, that kind of stuff. We did include this methodology in our new version, Metastock 19. And if you're not familiar with Metastock, I'm not going to spend a lot of time on Metastock. We'll spend a lot of time in Metastock looking at charts and examples and that kind of stuff. If you have examples you'd like to say, put them in the chat. I'm happy to look at any symbol you want, really. But one thing I will say about Metastock before we really kick things off is it has been rated #1 in its price category for 31 straight years. So there's a lot of things that Metascope can help you do. I love to use it for scanning and identification. I'll be highlighting as we go through. I don't kind of how Metastock can be helpful for what you're doing in the market in terms of scanning and in terms of kind of understanding different methodologies. But the main thing I want to really do is kind of just talk to you a little bit about and train you a little bit on the Ichimoku method. So in any case, let's go ahead and get started. In the Ichimoku method that I'm going to be covering today is all in Metastock 19. If you're using older versions of Metastock, good. Thank you for using Metastock. With Metastock 19, we had a huge upgrade that just came out. It came out back in May, and it does a huge amount of things. And we're certainly, with the new theme support, the support for multiple monitors, the charting, the tabbed interface, the new layouts, the new work and feel, very, very big upgrade. And that's one of the reasons I wanted to kind of come in and highlight some of the new systems. It's easy for us to come in here and talk about all the stuff that's been in 19, and it's easy to kind of just skip some things that are in there. But as part of the new upgrade, there's been some new methodologies that have been included, including ETS by Michael Murmer, the Ichimoku's master system, the gap identification system, and an update to the RMO. So the only thing we're really going to talk in detail about is Ichimoku and how it works. And let's kind of jump into it. So Ichimoku used to be an add-on that you could buy for Metastock. It was developed by a friend of mine, a gentleman by the name of Robert Dedman. He's done a lot of really good programming for Metastock over the years. And there are some things that I really, really like about the methodology and the way he implemented into Metastock. And so that's why I approached him when we're getting ready to do 19 and say, I just want to make this available for all of our customers. And we negotiated a price for it and all that kind of stuff. So I'll talk a little bit more about kind of how the add-on is helpful and that kind of stuff. But let's really talk about the methodology. So right here, I've got a picture. This is a gentleman by the name of Goichi Hasada. He also referred to himself, as you can see right here, as Ichimoku Sanjin, which means what a man in the mountain sees. Thomas, you should be able to hear me now. It might have been that you're just a little bit behind. Oh, man. But if you do have issues with hearing us, if you hit refresh on your browser, that should help. Try hitting refresh. Okay, I'm going to type that out just because if you can't hear me, I can explain it to him all I want. And then here, if that. Okay, all right, let me just kind of answer this real quick. Okay, all right, cool. All right, Goichi Hasada, Ichimoku Sanjin. He developed basically the Ichimoku Kinko Hyo indicators. He developed them in the 1930s, and he roughly released it to the public. I'm looking at my notes just to kind of get to make sure everything's accurate. He released them to the public back in the 1960s. So he developed them for about 20, 30 years. Then he actually released them to the public. And obviously, there's been a lot of popularity. These have been gaining in popularity over the years, this methodology. I know a lot of people that teach how to kind of look at the Ichimoku. They run courses on it. And a lot of people are looking for like crosses and some of the core mechanics of it. If the Ichimoku Kinko Hyo translated, if you translate that into English, it translates to one glance equilibrium chart or an instant look at the balance chart. So let's go ahead and kind of dive into kind of exactly what a Ichimoku chart looks like and kind of the uses for this indicator. So there's quite a number of them. I'm going to go through all of them today here in the seminar. But you can use the Ichimoku Kinko Hyo indicator to determine when to buy and sell a chart. There's some very critical buy and sell signals that are in there. There's a lot of stuff that goes into kind of determining whether a stock is bullish or bearish. We'll talk about that. You can use the Kumo or the cloud to anticipate future price direction, what it's going to do. You can show the current and expected future trend using the Kumo cloud. There's elements that help you to determine the stability of the trend, and some places that you can use to identify stops in the Ichimoku method. So when we break this down, I'm going to go through all of the indicators. Also, I did say this a little bit earlier, I've got a chart loaded to look at with General Electric, which has been a really pretty good example this year. If you have other charts that you want to look at, other ticker symbols, type them in the chat comments. Every time I kind of look in this direction, I'm looking to see if my sound is working, and if everybody's got questions, if you've got that kind of stuff, I will pay attention to questions, to symbols, to all that kind of stuff. So let's go ahead and get started with the Ichimoku. We'll start with the indicators. I think that's the best place to start. These are the indicators that are included in the chart. You've got the Tenkan-sen, the Kijun-sen, the Senku span A, which is the top of the Kumo. Well, not the top, the Kumo. The Senku span B, the distance between that is the Kumo. You've got the Chikou span and the close. So we're going to go through all of those and kind of how they relate to the methodology and how to read them. We'll start with the Tenkan-sen and the Kijun-sen. So if I wanted to tell you how to calculate the Tenkan-sen, try having the mic distance or use headphones. I should be the only one broadcasting, Ma. Are you having a difficult hearing me? If so, I can move the mic a little bit closer. And I can make sure I'm looking at it when I'm talking. That does help too. So anyway, if we talk about the Tenkan-sen and the Kijun-sen, if we're looking at a chart of the Ichimoku, I'll show you this on GE as well. If I wanted to kind of look at the Tenkan-sen, that's going to be this pink line right here. It's going to be the one that hugs price the most. And what it is you're looking at the highest high bar and for the last 9 days. And you take the value of that and add it to the lowest low bar for the last 9 days. You take the sum of that and you divide it by 2. So it's not a moving average, it's not anything like that. What you're looking at is kind of a midpoint or a middle price for the last 9 days. Okay, and that's called the Tenkan-sen. Okay, the Kijun-sen, same calculation, except for you using the highest high value for 26 days and the lowest low value for 26 days. Okay, and because you're kind of looking at kind of a middle price, it's not really a moving average, but you can look at it as the same way you would look at a shorter term and a longer term moving average. In other words, like if you're up above, your Tenkan-sen's up above your Kijun-sen, then it's going to be bullish. Okay, if there's a cross up above the Tenkan-sen, that's actually a classic buy signal of the Ichimoku. And there's a number of ways that we can actually calculate it. But if the price is trending up, generally because the Tenkan-sen is a little bit closer, it will be trading above the Kijun-sen. Okay, so here's kind of the different ways that you can kind of read it. If the Tenkan-sen's above the Kijun-sen, that's bullish. Okay, that means prices are generally going up. If the Tenkan-sen's below the Kijun-sen, that's generally bearish. And a cross indicates a classic buy signal. So let's look at that on GE, and we'll just kind of talk a little bit about what's going on with GE. And that's the chart that we've got. I'm glad that helped. That was an easy thing. Okay, thank you. Thank you. Whoever is monitoring the audio and says it's good. All right. So let's talk a little bit about GE. I'm going to kind of use this as an example as we go through it again. If you want to look at some other charts, we can look at any chart you want to. But right here, if I want you to ignore all of the indicators on the chart for right now, except for the Tenkan-sen, which is this purple line, and the Kijun-sen, which is the red line. Okay, the Tenkan-sen is going to be the shorter one. If we're trading up above the Tenkan-sen, that's bullish. So you can see right here where the Tenkan-sen and Kijun-sen crossed on GE. This would have been November 14th of 2023, so a couple years ago. Here we had a cross, which is a buy signal, and it's been traded bullish for a huge part of this up move. GE was and Nvidia, both really good trendy stocks towards the earlier part of this year, and they've been kind of shelved for a little bit. But during this whole move up, you would have considered that a bullish indication because your Tenkan-sen and your Kijun-sen, your Tenkan-sen's above your Kijun-sen. Okay, right here where it crossed down, that would be a bearish indication. You'd actually get a bearish TK cross signal. You see where that shows up on the chart, where that cross happens. So the ways that you read the Tenkan-sen and the Kijun-sen, I like to kind of refer to them, they're not moving averages. To be super clear, you're looking at a middle price from the highest high value to the lowest low value for 9 periods with the case of the Dickinson, but you can kind of look at them in the same way you would a shorter-term moving average and a longer-term moving average. If you know how to use those indicators, it helps you make sense of these ones. If the shorter one is above, it's bullish as it was at GE. If they're kind of bouncing back and forth as it has been for quite some time now, it's choppy. And the cross signals are one of the ways you can identify whether it's bullish or bearish. And that all has to do with the Tenkan-sen and the Kijun-sen. Okay, cool. I'm just looking over here for questions because we're going to move on to the other indicators now and kind of how they're calculated. Hopefully this is making sense for you. If you have questions, by all means ask. Okay, let me jump back at it. Let me jump back in here. More of a midpoint than a moving average. Absolutely, Glenn. Yeah, I'd just like to kind of a lot of people, and I'm going to put this out there. It's a midpoint. It's exactly what it is. You're looking at a midpoint for 9 days and a midpoint for 26 days. So don't get it twisted. But you can look at it if you look at a shorter term, if you understand how to analyze a shorter term moving average and compare it to a longer term moving average, that's kind of the point that I was making. So thank you for the help. All right, cool. Let's go next, and we'll talk a little bit about the Senku Span A and the Senku Span B, which combined means the Kumo, or the cloud. Okay, so the Senku Span A, if I took both the Tenkan-sen and the Kijun-sen, I added those values together and I divided it by 2 and I put it 26 bars into the future, that would give me the 26. That would give me the Senku Span A, which on this chart is the blue line here. Okay, for the Senku Span B, that's going to be this chart here. If I took the highest high for 52 days, so the midpoint, and the lowest low for divided. Okay, wait. Let me read this. If I take the highest high for 52 days and the lowest low for 52 days, if I add that together and divide it by 2, I'd get a 52-week midpoint, right? And then if I plotted that forward into 26 days into the future, I'd get the Senku Span B. Okay, so the Senku Span A is just the combination of these, push forward in the future a little bit. The Senku Span B is a 52 average, as Glenn said. I actually like that. I like that wording there, Glenn, but also pushed into the future. And the distance between those two are the Kumo, or what? Kumo means cloud. So if you ever hear somebody say Kumo cloud, it'll probably be me. You can tease me a little bit because I'm just saying cloud. But that's what the Kumo is. Okay. Now the Kumo, it has a lot of different ways that you can analyze it. And let's just kind of go to a different chart where we can talk about it. Okay. You can use it on trend bias. So for example, if the price is trading above the cloud, that's going to be a bullish indication. If it's trading down below the cloud, it's going to be a bearish indication. If it's trading within the cloud, it's basically going to be a sign of indecision or indecisiveness in the market. Okay, so jumping into kind of just the chart that we have with GE, you can see right here, we had a cross up above the cloud right here at the beginning of this upward move. It traded upward above the cloud. That would be another indication that this was a bullish market. Okay, as we kind of went a little bit sideways, it's going to be coming in here. It's been a little bit sideways since it had like this really big move up. But it's used the cloud actually as support quite a bit. It's been bouncing off of the support and kind of firing off some signals as we go. We'll talk about that in a second too. But if we're trading up above the cloud, that's a bullish indication. If we're trading down below the cloud, which didn't happen in this chart very much, here it did, here it did, here it did. The cloud has been holding. If we're trading down below the cloud, it's a bearish indication. And you can see right down here, in Metastock, with the expert advisor attached, it's going to tell you if it's above the cloud, that's going to be green highlighted. If it's down below the cloud, and you can see where that cross actually happened. That's a bullish buy signal. That's a second buy signal for Ichimoku. The other was the TK cross. If you have a cross up above the cloud, that's bullish. That's an indication that you could use this as an opportunity to go long. Okay, all right, cool. Just looking for comments here. Okay, so let's kind of go back. Trend bias, price relationship to Kumo, is it up above? Is it down below? Is it inside? that gives us an indication of whether or not we're bullish or bearish at any given time. We can also look to the direction of the Kumo to kind of get an idea of trendiness. So for example, and we can do that both now and into the future. Okay, so if we kind of take a look here, also it says right here, the Kumo acts as support and resistance. That's actually a really good example of that on the GE chart. So let's kind of walk through that a little bit here. Okay, if I'm looking at GE right now, I'd say currently the direction is very, very flat. Okay, so my trend bias, if I'm looking at the Kumo cloud, I'd say that right now the current direction is sideways. I'd also say that the future direction is sideways. So that would basically give us an indication or neutral. Okay, it's not headed anywhere fast. In fact, it's been kind of shelved off since like May. Right now, we're in, if you're watching this in the future, we're in August, and it really hasn't decided to break out of this channel yet. Okay, so if I'm looking at kind of the trendiness of this particular thing, I'd say it's not trendy at all. Okay, now the Kumo does act as support and resistance. So if we take a look at kind of where it comes down into the cloud, closes above, comes down into the cloud, closes above, comes down into the cloud, closes above. And so it's actually done a really, really good job of kind of staying and using that Kumo as a support area or as a resistance area. Okay. If we go back a little bit and just start looking at GE, earlier here in the trend, it's been up above the cloud for a really, really long time. But if we're looking at the current direction of the Kumo right here, it's been pretty flat. If we start to look at it here, it starts to give us more bullish indications. So there we go. Glenn says, is the top and bottom of the cloud regarded as support and resistance? I usually, that's a really good question because it's really specific, Glenn. For me, I usually look at support and resistance as an area. And with the case of Ichimoku, it's more going to be the area of the cloud. So you'll notice we kind of come into the cloud here, it holds, goes back out of the cloud, holds, goes back out of the cloud, holds, goes back out of the cloud. So I didn't mean to do that. Let me go ahead and fix that. I would say that from a general perspective, the whole area of the cloud is support and resistance. Once in a while, you have a penetration of the cloud. You had that right here, closed down. You give us a sell signal. But I would generally review that as an area. In general, too, when I'm looking at support and resistance, I look at those more as an area than as an absolute value. So like if I'm trying to say, well, looking at the tops here, I won't get too sidetracked here, but if I'm looking at the tops here, I might say, Anne-Marie talks a lot about this when she talks about support and resistance, Anne-Marie Bain, to be really specific. But if I'm looking at kind of where there's tendencies to drop or for this to reverse, I'd actually kind of say the resistance here is maybe this area where we kind of have a lot of turnarounds. So, but yeah, I would say that it's not the top or the bottom, but it's kind of the area in between to give a shorter answer than the long rambly one that I just did. So, okay. All right. The other thing that's kind of a bullish indication is what is called a Kumo twist. So if we're looking at the Senkou span A and the Senkou span B, in a general uptrend, you're going to have your Senkou span A above your Senkou span B. And you can see that happen all the way until right about here when it crossed around Senkou span B. Okay. If your Senkou span A is above your Senkou span B, that's generally bullish. If it drops down, that's called a Kumo or a cloud twist. You'll notice the color of the cloud actually changes. That's a bearish indication. So right here, you had a little bit of a bearish, that Kumo twist. And you can see that happening in the future. Right now, we have a Kumo twist that you can see right here in the future. But that's a bullish indication. So there's a lot of things that you can kind of use to, at a glance, determine, is it bullish based on the TK? Is it bullish based on the cloud? Et cetera, et cetera, et cetera. Now, I would say, if we treat Glenn, this is an area of support and resistance. If we're in a long trade, we could use it as a way to get out of a trade. And that's kind of one of the things that when I say it, we use it as a stop. There's actually a couple of suggested stops that you can use, but nothing that Goichi Hasada actually talked about when he developed the method. But if we treat this area, this cloud, as a support and resistance, if we come down below the cloud, we could say, well, okay, that's where we're going to stop out of a trade. That's one stop that we could use. We could also use the top of the cloud. So if we came down and closed in the cloud, we could say, well, okay, we want to go ahead and get out of the trade. Those are some of the suggested stops that we can use. And that's how we can use the Senkou span A, the Senkou span B, and the Kumo as a stop method as well. All right. And also the Senkou span A and B, or the Tenku-san. And we'll talk a little bit more about that. So that's the cloud. That's the biggest indicator. There's a lot of things that go into it. There's a lot of reads that you can do on it. And hopefully those all make sense for you. If not, let me know. All right. The last, well, actually, we're going to talk about two other indicators. The last is the Chikou span price, or the Chikou span. And then instead of being pushed into the future 26 days, this is actually pushed into the past 26 days. But all it is the close price. So if you take today's close and you move it back 26 bars, that will give you this top indicator, or the Chikou span A. In this case, it's the stop. It doesn't necessarily have to be above price. Or the cloud, it's just the close, and it's 26 bars ago. Now, the way that that's interpreted based on this methodology is we will look at that as a relationship to the Kumo. Okay, we'll also look at that as the relationship to price. So if I'm kind of looking at GE right now, I'm going to zoom in just a little bit and give you guys a bit of a clearer picture. If my Chikou span is kind of above the cloud, that adds stability to the trend that we're looking at. Okay. If also price is the kind of tending above, if it's also above the price back here, it's also an indication of a stability of the trend. It's more of a confirmation indicator, and that's how you look at it. Okay. So if we're up above the cloud, that's a bullish indication. You can give it a bullish point. If it's down below the cloud, that's a bearish indication. You can give it a bearish point. If it's in the cloud, it's 0 points. Okay. Same thing with price. If it's up above price, it means that the price is higher now than it was 26 days ago. It's about the same level as price. So I give that a neutral point. But that's kind of how the scoring works for it. This is bullish, and this is bullish, and this is bullish, but this is bearish, and this is neutral. And you can kind of use it to kind of get that equilibrium. Okay. I think that's it in terms of all of the indicators and how they're used. So the Ichimoku, basically the uses for it is as buy and sell indications, bullishness and bearishness, future price direction, support and resistance, stability of a trend, how to anticipate potential reversals, et cetera, et cetera, et cetera. Nobody gave me any symbols, but let's kind of take a look at kind of how the Ichimoku method can kind of help us understand what exactly is going on in the chart. You've already noticed by looking at this that it's kind of showing where it's above the Kumo, showing where the major buy and sell signals are. But it also kind of does a pretty good job, the way that Robert designed it, to give us a breakdown of the Kumo. I was looking for the right words that I wanted to use. Breakdown seems like a really good. It also gives us a bit of a, maybe scorecard would be a better word. But what it'll do is it'll kind of help us analyze those constituents of what's going on, tell us how bullish or bearish things are in aggregate. And so what I'm going to do here is I'm just going to kind of go through the chart and kind of maybe point out some of the annotations that are on there, at least the ones that we're looking at, and then also kind of show you exactly how that scorecard works. Glenn, you can use this on a 10-minute time frame. I don't have a lot of experience using it on a 10-minute time frame, but it will work on a 10-minute time frame. And generally for the 10-minute time frame, I'd use it exactly the same way. I'd be looking at it to get a scorecard, to kind of get an idea of what's going on and kind of what the bullishness, bearishness breakdown looks like. So for buy and sell signals, the signals are going to be the same. So for example, right here, you see this buy signal. If I hover over it, it's going to say TK cross. That's because the Tenkan-sen crossed up above the Kijun-sen. So right here, you see where Tenkan-sen went up above Kijun-sen. That's a classic buy signal. That's one of the two buy signals that we're looking for, and that just happened. Okay. As long as it's above, you see that we have the highlighted of the bar is going to be actually green and not red or black, which are the other two options. That just means that the Tenkan-sen Kijun-sen relationship is bullish. Okay. The other classic buy signal, so that's the first one I talked about, is that Tenkan-sen Kijun-sen cross. The other buy signal, which is probably the most important, I'll call it the most important, but I'll also say that I'm based on my opinion and only my opinion. But another really key thing is like, when did we close above the cloud? So you see right here, this buy signal comes in because it came down below the cloud, which gave us a close below the cloud, which gave us a sell signal. But the very next day, we had a close that came up above this cloud, which is a long signal. So right here, if I cover over this one, it's going to say we had a close above the Kumo. Those are the two signals that you're looking for. Okay, and let me just be really pedantic about it. Let me just kind of get really clear about it. The first one is if it crosses above the cloud and you want to close above the cloud. You're looking at the close relationship to the cloud. That's a primary buy signal. Okay. The secondary one is if the TK the Tenkan-sen, this pink line crosses above the Kijun-sen. Okay, that would be a buy signal. Okay, is exactly the opposite if it closes down below the cloud. Right here, you had to close below the cloud. That means that that's a bearish signal. And then if it crosses down below the Tenkan-sen, Kijun-sen, that's also a bearish signal. So the buy signals and the sell signals are the same. The way that you read them are the same. And what I'd encourage you to do is if you want to trade this on a 10-minute chart, play with it on a 10-minute chart. Get real comfortable with it. Okay, but let me open up the commentary here in Metastock and walk through how to kind of just how it helps us kind of put everything together. Obviously with GE, we're going to look at the very far end of the chart because that's where we're kind of looking at. But so right here, you've got this triangle. This triangle is basically just pointing at the day that we're looking at. And what I'm actually going to get is a very good, like Robert did such a good job of designing this. I'm going to kind of make it a little bit bigger just so that we can kind of go through the whole thing. But it's going to give us our Ichimoku values. But all those things that we were talking about are going to be broken down in terms of their bullishness, their bearishness, and all that kind of stuff. So right now, in terms of the TK cross, we had a bullish cross, right? Just a few days ago, we're up above, so that's bullish, and it's going to give us a bullish ranking. It's also going to say that the strong TK cross signal just occurred 3 days ago, which would be right here. It says 3 parts ago or 3 periods ago, because if you're looking at a 10-minute, it's going to be 3 periods ago, 30 minutes ago. Okay. Our relationship from the price to the Kumo, well, the price is above the Kumo, so that's also bullish. Okay. If we look at the current Kumo direction, my read of it was actually it's more neutral or sideways. His read based on how he's measuring it is the current correct direction of the Kumo is actually bearish. So wherever he's sampling this from, he's probably sampling it from right here or something. But generally the cloud has come down from right here. And that's definitely not something you can argue. It's objective. So he's giving that a bearish. If we look at the future Kumo direction, if we kind of look at where this is going in the future, it is rising. It's a slight rise, but it's enough to give us a bullish signal. Okay. Our Chikou span, that's this relationship to the Kumo. This is above this. So it's reminding us that this bullish right now. Okay. Our Chikou span relationship to price, again, we're above the value that we were 26 bars ago. So that's also bullish. You see how it's kind of breaking this all together. Our periods until or since the last Kumo twist is 20 bullish. And it's actually looking into the future. The next one is 23 bars from now where it goes bullish. All right, cool. All right. I saw Greg say something, and I just wanted to make sure that it wasn't a question for me. So he breaks all that down. He also talks in this. Robert, he's designed so many things for Metastock. He just does a really, really good job of kind of breaking this down. Now, if I'm looking at where support and resistance values are, our value for the Kijun-sen support, so if we're using the Kijun as support, that would be 163.70. We could use that as a stop loss if we want a stop loss. I actually went to classes at one point to properly that taught me how to properly enunciate my S's, and they said to smile and say snake, but that was in kindergarten. So our stop loss would be at 163.70. And then our, if we wanted a little bit of a looser stop, we would have that at 162.07. And that would be kind of one, I think it's the higher of these two values. It kind of gives you some ideas of where you can anticipate that support and resistance coming in. Now here's the other thing that I really, really like, okay? In addition to kind of breaking everything down, you know, we've kind of gone through a lot today in terms of kind of the relationship of these indicators. And I would make an argument that none of the things that we've talked about are difficult, right? They're all pretty objective. They're pretty simple. As long as you kind of understand what the indicators are and how to read it, they're straightforward, is I guess the word I'm looking for. They're objective. There's something that you can follow along. But I would say with like 8, 9 conditions, they're also, that's a lot to keep track of, and kind of a lot of the signals to keep track of. So down underneath, he kind of wrote a detail to kind of talk about how these symbols interplay with each other, how he's getting the readings off of them, what they're looking for. And so generally, this is one of the helpful things that I think is really helpful about not just this expert advisor, but the ability for expert advisors to kind of explain what's going on in a chart. If you're interested in Ichimoku with what's going on, you can kind of read this and it's going to tell you. So let me zip this and I'll put it down. So right here, we've got the details. This is where he breaks down all of the signals. Now, this is color coded. So the black part is where he kind of just gives you a general overview of what he's looking for. He being Robert, the guy that programmed this. And it just says, okay, the Tenkan-sen, Kenjin-sen cross is the primary predominant signal, et cetera, et cetera, et cetera. I'll read the whole thing. The blue part actually kind of talks about what he's seeing on the chart with his programming and kind of the things that he's getting. And it'll give you a breakdown of what's going on. So the black part for the T signal, that explains the TK signal in general. The blue part is very, very specifically designed to tell you what's going on the chart. And he does that with the close above and in or below the Kumo. He does that with the current Kumo direction. He does that with all of the things that go onto this dashboard right here. And I just love it because like it helps you understand. That's one of the reasons that I wanted to actually kind of make sure that this was something that we gave to all of the Metastock users. When I started 26 years ago or so, as we covered earlier, when I started 26 years ago, like one of the expert advisors that I really immediately fell in love with was the one called candlesticks. And if you apply that to the chart, it shows you all the patterns, it visualizes them. And then if you go into the commentary, it tells you about the patterns. And I love when we have stuff in there with Metastock because I think education's like super important. But for this, the way that he put it together to kind of help you understand what was in Goichi Hasada's thought process as he's going through it, but then help you relate it to the chart and help you break it down. As you kind of get more and more comfortable with this, you won't be reading all the blue stuff and the red stuff. You'll remember, but you'll always probably be looking at this relationships to make sure that you're looking at the bullish and bearish relationships. So just absolutely kind of like the way that this is put together. I've seen a lot of, over the years, I've seen a lot of classes, sometimes $5,000, $10,000, that basically they're just teaching the Ichimoku method and the cross of the cloud. This is something that's been included with Metastock now for version 19. And I think it does a really, really good job of being helpful for you. The other thing, and you'll know this if you know anything about me, is I love the ability for Metastock to go through and tell me, here's opportunities that exist in the market. I love the fact that I can go in and say, okay, well, let's do it. Well, let's look at, I'm going to go into our scanner. Let's look at opportunities where we might have a long signal, a signal to go long, or a re-entry signal. Let's find the opportunities and like look at the scoring and maybe see if some things that we want to take a look at. So as we get a little bit more, if Ichimoku is the method that we want to use, or we want to kind of find stocks that are crossing above the cloud or have that TK cross, it's very, very easy to do. So what I'm going to do is I'm going to go ahead and unselect all of the explorations here. What I'm going to do is I'm going to go to the Ichimoku method, and I'm just going to show you how this works. So the scan is called Ichimoku-signals. I'm going to go ahead and run that. And what I'm going to do, just to kind of make it run fast, is I'm going to just select some instruments. Now, I want to say, as I'm selecting these out, I'm going to do the NASDAQ, the S&P 500, and not the composite. Let's just do a smaller list than that. We'll do the Dow Industrials, the NASDAQ, and the S&P 500. If you want to do all the optionals, you could. If you want to do all the ETFs, you could. If you want to do all the stocks, you could. If you're not here in the US, we get a lot of customers that are international. We get our data from Basically, what used to be the Reuters infrastructure is now owned by the LSEG, but they literally cover 300 different exchanges. So you could use this wherever you're at. If you're in India and you want to use Indian stocks, no problem. Australia, we get a lot of customers from Australia, no problem. London, no problem. There's over 300 exchanges that are here. For the purpose of kind of doing it pretty quickly, I'm going to do the Dow Jones, the S&P, and the NASDAQ. But you can do whatever you want. It doesn't matter. And what I'm going to say is, okay, give me all the stocks that are giving an opportunity now. Okay, I'm going to go ahead and run it. I'll go ahead and start it. I did just have, yeah, okay. I was like, did I set it up right? I did. Yay, I'm winning today. But, so it's going to go through. It's going to reject. And you'll notice right now it's rejecting about 90% of the stocks I'm throwing at this. So those, if I'm just looking at kind of methods that have a buy signal that's actual today, 90% of these stocks are being rejected. I'm only going to look at 10. I'm already kind of filtering out the ones that don't fit my criteria. And so for me, as somebody that kind of works, I tell my boss I work really hard. And if you're watching, oh, very hard. But like I do spend a lot of time actually working. If I can just run a scan real quick and have it done in a couple of minutes and focus on the stocks that have an opportunity to ignore the noise, it's very, very helpful for me as a trader. So, and there we're done. Okay. If we look at this here, I'll just kind of walk through how we can kind of actually look at this. The signal column is going to have a 1 or a 2 or a -1 or a -2. It'll have one of those numbers. The 1 means that it had a cross above the cloud, and the 2 means that it's above the cloud already, but it had a TK cross in the proper direction to give a long signal. Okay, a -1 means it closed down below the Ichimoku cloud today, and a -2 means it's down below it, but it also gave a TK cross signal in the short direction. In other words, the TK went down underneath the Tenkan-sen went down below the Kijun. And I had to think about it for a minute because I had to think about what the indicators were called. So we can look for the primary entries, which are that cross above the cloud, or we can look for the secondary indicator in things. And what we look to identify is it a 2? That means it's the second entry after the cross. Or we could look at the 1, which would be just closed above the cloud. It won't give signals unless it's in the direction of the cloud. So I can sort this by signals. So if I just wanted to kind of identify the 2s, the ones that are above the cloud that had a TK cross, I can see that right here. If I want to look at the 1s where they close above the cloud, those would be all right here under 1. But the other thing that he actually does is he scores that. So if we come back here and we talk about kind of the bullish and bearishness, if I was to add these up, that's 1, 2, 3, 4, 5, 6, -1, that'd be like 5, right? We'd have a positive bullish score of 5. They're all bullish except for 1. Okay, he scores that up in this scan for me. So before I kind of go in and look at it, if I want to just look at what the scores look like, how bullish is this or how bearish is this, I'm going to sort this based on the actual score. All of the ones that have a score of 6 are going to be at the very, very top. I'll have the 5s and the 4s. And I found this interesting, and I'm just going to kind of share it with you. I'm not going to say it's a good thought or a valid thought or whatever, but when Robert did the class where he talks about Ichimoku and how all the scoring works, he's like, I don't really focus on the 6s. Okay, at that point, everything's really, really bullish. I prefer to find them a little bit earlier in the trend where they're more of a 5 or more of a 4. And I thought that was interesting in terms of the way that he kind of looked at it. He didn't want everything to kind of be there. He just wanted most of the things to kind of be lining up. And so that's why he'd kind of look at the 5s and the 4s. In the spirit of that, well, Costco came up on this list. So we're going to look at Costco real quick. So Saki and Maverick, if you're here, we're always looking at Costco when it comes out. But if I'm just looking at the 5s, you've got Masco Corp on Target. Target did earnings this morning. I understand that it opened positive. I haven't looked at it since then. Let me go ahead and kind of just open up a few of these. So we'll kind of take a look at them. And the whole idea here is, okay, I understand the symbols here. Here's some opportunities that are giving us some mostly bullish phases. Okay, so I can just open up a few of them and kind of go through. We'll look at the charts. I'm not going to recommend you buy them because my lawyer would get mad, but we'll kind of just take a look at them and kind of just review them based on the Ichimoku cloud. So right here we've got Costco. Okay, we love Costco. Do you know that they offer a hot dog in their food court for $1.50, which comes with a soda and a free refill? So if I'm kind of looking at Costco now, though, we just had a cross up above the cloud. Okay, so that's giving us a bullish. We just had the TK cross, which just happened just recently, so that's also bullish. But if I want that whole breakdown, it's right here. You've got the TK cross, which is bullish, the price Kumo relationship, which is bullish. All of that is kind of written up and put together for you. We have some ideas in terms of where we could see support and resistance. And this is giving us a fairly bullish signal on Ichimoku and breaking it down for us. Okay. Let's look at target too, just because like I only pulled up Costco because well, we always look at Costco when it comes up. In terms of target, let's kind of take a look. It kind of gives us a little bit more of a mixed picture. Earnings call must have been really good because we had a gap open into the open. It's been trading negative today. But if we look at kind of where things are, we've got a bullish TK cross. Price in relationship to Kumo is bullish. The current Kumo direction is bearish. It breaks that all down for you. It kind of gives you kind of a signal in terms of where these are. Okay. Now, if I'm kind of looking at where target is, you know, the current Kumo direction is kind of headed up in the future, but it's still down. This might be something that I'd want to eliminate for other reasons. I might want to see this settle into the cloud. But everything that we're looking at in terms of kind of the scoring is bullish or bearish. So let's take a look at ON. We'll just take a look at this ON one, which is maybe a less fundamental driven event. This is ON Semiconductor. And here you can kind of see exactly the same thing we were talking about before. That breakdown of the score, the way it works, and that kind of stuff. So that's how it works. Okay. Looking for last minute questions, et cetera, et cetera, et cetera. Anyway, I wanted to sit down and just talk a little bit about this. I hope it's been helpful for you. I'd really like the way that he's programmed this into Metastock. And I love the fact that it's included because now in Metastock for free. I love those things that can help you understand different methodologies. I think knowledge. I saw a quote today. I'm trying to remember it. But it was a Japanese proverb, which is probably, and I'm going to try and paraphrase that because I didn't actually kind of write it down, but learning is a process of rowing upstream. You have to keep doing it or you go backwards, something like that. So in any case, this was something that kind of, I think does a really good job of helping you identify different things on the chart and help understand it and finding those opportunities that have a really good buy and sell signal. So from a perspective of that, we talked about the scanning. Oh, there is system testing in here. I probably won't go into the system testing, but you can go in. You can test based on kind of the different buy and sell signals so you can identify exactly what works well. And this is all included in Metastock 19. Everything we just talked about. It used to be a full-blown add-on. It's now included in Metastock 19. And I think it's worth the upgrade price just by itself. You know, we talk if it's a reason to buy Metastock by itself if you like Ichimoku, like kind of what's in there. So I want to remind you before we go, Metastock's been rated this year. It was rated #1, 31 years in a row. Okay. If you've got the older version of Metastock and you're looking to kind of upgrade, this is a reason to do it in addition to kind of like all that other stuff that I talked about, like the new theme support, the tabbed interfaces, the support for multiple monitors, all of the stuff that they put into it. If you're new to Metastock, though, I would encourage you to try it. It has been rated the best software in its price category 31 years straight. We have customers. Well, actually, I've been here for 26 years. A lot of our employees have been here. I think our average employee tenure right now is 13 years. It's a great company to work for, but it's also a great product to represent. So I'd encourage you to try Metastock. This is just one little thing. Like if there's 300 systems in Metastock, this is one system in there. You can test it. You can compare it to some of the other systems. You can scan for it. I think it's a great system. That's why I did a class on it. But if you haven't ever tried Metastock, you should give it a go, because I've seen a lot of people come in, they teach a class, show you how to use Ichimoku, they charge a lot for it. This is all just included. It's going to show you how to use it. It might be a method you like. If it is, you can scan for it. So let's talk a little bit about the pricing. I got a special offer if you want to try Metastock. Metastock, we've got two versions. We've got the real-time, we've got the end-of-day version. Our real-time includes what we call Metastock Zenith. Metastock Zenith is an institutional quality data feed. It's literally the same data feed that you'd subscribe if you were a bank and you went to subscribe to something like Bloomberg. It's not Bloomberg, but it's like Bloomberg. It's got the best, some of the best news on the planet. It's got thousands of reporters in 300 different news bureaus around the globe that report the information. It's got one of the cleanest data feeds that's available, and this price is nothing compared to what you would pay if you were an actual institution going to get it. So you get that news feed, you get the new information, you get really a top tier data service, and you get Metastock. It's $265 per month, and that's it. Okay. Our end-of-day version's a lot cheaper. It's $69 per month. It includes the Metastock. It doesn't include the newsfeed. That's going to be something that's a premium. It does include end-of-day data, the Metastock. You can do everything that I've showed you, and a whole ton more. And it's $69 a month. If you get a subscription to Metastock, we'll give you free unlimited support. One of the things that I'm proud of as an employee is how many times we get a perfect 100% score from people that contact support. We keep more people in our support team than we do in sales and marketing put together. And you have unlimited access to them. So if you're ever kind of trying to figure something out, you can call somebody. They're going to be right here. They're going to be local. They're very knowledgeable in the program, and they do a great job. We'll also sit down with you and we'll show you about we call it a white glove setup or an installation appointment. We'll sit down with you. We'll invest in you. We'll show you how through the program how to use everything. I shouldn't say everything. We'll spend up to a couple of hours to just kind of make sure you know how to use the main things. There's so many things in Metastock that they'd never get through it in 2 hours. And then we'll also give you free training that you can go with. So $69 a month, or $265 if you do real time. If you buy a month, what we're going to do is we're going to give you the second and third month for free. So 265 divided by 3 is going to be about 86, 87 bucks a month. That's going to give you access for 3 months. Okay. Which actually, here, let me make a correction right here. I meant to look at this, but as I was getting ready for the show, I kind of took notes and I forgot about this page. What we're going to do is if you, right now it's the 21st of September. This will run you October, November, December, almost till Christmas time. If you can imagine, that's only 3 months away. Wow. So you can go ahead and get set up. If you buy a month, we'll get you the second and third month for free. Even at the $267 rate, that's only 88 bucks a month. If it's something that you're not happy with, if it's something that's not helpful for you, you can cancel it at any time. But I want you to be one of the customers that has been with us for decades, that use the program. I want you to use it every day like I do. Because I know if it helps you kind of make better informed decisions, it's going to be worth it for you. And we'll do our best to kind of get you there. So give us a call if you have questions. If you want to get set up, you can call us at 800-882-3040. You can go to metastock.com/sales-chat, or you can get us at metastock.com/3for1. Question from Ivan.
On YouTube.
So Ivan wants to know, could I use the TK cross indicators with other trend-based systems, or should I be using Ichimoku as a complete system? Well, that's a really good question. And Ivan, I'm not going to tell you what to do. The only thing I would say, and this is from a perspective of, because we'll talk to a lot of people when we talk about these indicators, and they'll take what they like, right? So if you're going to use a TK cross as an indication, you want to compare it to like another indicator, use the MACD with it or the stochastic. The market will let you go back in time. You can pull up a chart. You can kind of look at where those signals come in. You could use Metastock to test it. So all I would say is, like, if that's something that you kind of like and that's the part of it that you zeroed in on, play with it. I always find it interesting where people learn something and they just go, okay, let's trade on this thing. Don't. If you're ever implementing something that's new to your trading, play with it. That means you can go look at as many charts as you want. There's nobody making you actually buy something. You can actually buy it on paper. You don't have to buy a large amount. You can buy a small amount as you gain confidence. That confidence is going to lead to other things that are super important in trading, like discipline and like understanding what you're doing. So, Ivan, I think it's a good question. You do you, man. So, from that perspective, I hope you learned something out of the walkthrough of the Ichimoku today. Hopefully it was helpful for you. Thanks for watching it. If you're watching us on YouTube, hit like, subscribe, do all that cool stuff. It helps a lot. We appreciate it. If you haven't tried Metastock, I would encourage you to try it. It's something that I use every day to trade. Scanning is one of those things I absolutely love to do. So from that perspective, thanks for coming in. Thanks for watching. We'll see you at the next one.